Welcome back. Hope you're having a good morning. Well, the SGX seems to be suggesting a more or less flattish with a mildly positive start to trade. So let's see how that works. But we've got Hemang Jani who's joining in to help us out with some fundamental stock analysis. Hi Hemang, good morning. Thanks so much for joining in. Well, result season is upon us and we'll be waiting by for the big tech names to come out with their numbers. But I'm not sure whether you track Delta Corp. There's always been value out there, but unlocking that value has been difficult and they've had a soft quarter. What's your view at around this 180, 190 rupees odd? Yesterday it seemed the street was still sensing it because the stock went into the numbers week. But they've got cash in their books, the business is fairly decent, it has some risk as well. How do you approach it at these levels?
Yeah, good morning, Nigel. I think I looked at the numbers. They appear to be on a slightly, a muted side. And in terms of a very niche segment under discretionary consumption, this stock is something that, some people do have an exposure to. But we don't cover it in detail, Nigel. So I would not be able to comment in terms of the view of the reco.
What about Sula Wines? Any view there?
Nigel, can you repeat that?
Sula Wines. Sula Wines, they came out with an operational update. Do you have any view out there, or from that segment itself, beverages, alcohol, is there any stock you like?
Yeah, so Sula Wines we do not cover, Nigel, but I think when it comes to the beverage space, we've been liking Varun Beverage for a while. And, going by the kind of new launches that they have done and the way the entire geographical presence they've expanded, this is one name that we've been liking. Recently, the stock also got added onto MSCI. So we think that this is one name that we would go with when it comes to that, beverage category.
Okay. All right. Which one did you say? Varun Beverages, yes. Right?
Varun Beverages, that's right.
Varun Beverages. Okay, got that. So Hemang, everyone's going to be talking about the IT names, as Nigel is also pointing out. Anything specific that you're watching out for in TCS's numbers today, even if it's a weak showing, if there's some clarity on what the organizational structure would be post the exit of the CEO, if the numbers are not as bad as expected, do you think it's a good time to be maybe parking some money in large caps like TCS?
Absolutely. I think, Sonia, one thing which is very clear is that the market is going into this IT earnings season with very muted expectations. And if you look at the mutual funds or the institutional holding, many of them have an underweight position when it comes to IT. So which is actually a good sign. So if we don't see any major disappointment in terms of the numbers or the guidance, I think the stock should do well. Our own expectation is that the large cap companies will report about 1.6% kind of a quarter-on-quarter US dollar revenue growth. The mid-cap will show a little better. But yes, TCS, we do have a positive bias. We think that the large-cap companies are relatively better placed in the current environment. And within mid-cap, we like Cyient and Zensar. I think these are the two companies where we are expecting good quarter-on-quarter growth with some, decent guidance going into the next year.
I think, Hemang, morning, there were some varying headlines, right, on the state of monsoon. There was a SkyMed saying something, IMD, but the variation is not very much in terms of calling for a normal or below normal. We had and this is important because, we had the management of Mahindra, the head of the tractor business with us earlier, who basically said that we'll know in about 2 weeks' time. What kind of season they're expecting and how they want to plan for the season going ahead. What is your own sense on the issue? Because there are so many sectors where, the expectations are getting built in one way or the other. With regards to rains, go on.
So, Prashant, there are 2 or 3 things that I would like to convey here. One is that it's a little bit early to really take a call on the monsoon because, as we move closer to June, I think that is where we will have a slightly more clarity. Number 2, when people say that, okay, it's going to be 96% or 94% of the long-term averages, that by itself does not mean anything because what really matters is, whether, the overall spread is good or no. And thirdly, even if there is an El Nino effect that people are, making out to be, that does not necessarily lead to inflation. In fact, we have come out with a report which says that there is not much of a correlation between an El Nino and inflation. Now, having said that, I think, for us, sentimentally, a normal monsoon definitely is something very big for us. And particularly in the context of the slowdown that we are seeing on the rural side, on the consumption side, I think any news will have some impact initially, but we do not think we should worry too much about it at this stage.
Okay, I do want your thoughts on this entire railway space, Hemang, because there's a lot of orders that are coming through for companies, right? Especially with the Vande Bharat trains. So let's get, the management of Titagarh wagons on board. The BHEL Titagarh wagons consortium has received an order from the Rail Ministry to manufacture 80 Vande Bharat train sets. The order value is at 9,600 crores, which means about 120 crores per train set. Remember last month the company was declared L2 for 200 train set order. So is this the same one? Is it a new order? Umesh Chaudhary, the MD and CEO at Titagarh Wagons, joins in. Umesh, good morning. First, if you can just clarify for us, is this part of the same order for which you had got L2 last month? And that was for 200 trains, right? So this time you've bagged just 80 trains. Can you clarify what's happening here?
Yeah, good morning. Yes, it is the same tender. It was a tender for 200 trains, and tender stipulated that the L2 bidder would get 80 trains and the L1 bidder would have gotten 120 trains. So we were the L2 bidders and we got the 80 trains arising out of that.
So are you expecting any more trains, or is this it, 80 out of the 200 orders total?
No, this is 80 out of the 200. So that tender stands closed in the sense the gap 200 would get distributed between the L1 and the L2. But of course, this is the beginning of a new opportunity. It's almost the beginning of a new era, I would say. Because Vande Bharat type of trains are the future for the railway transportation in India. And the very fact that we've been able to get into this with the 80 train, which is a substantial order, mind you, even if you look at the global scale of ordering for such type of trains, this is perhaps one of the largest orders because this also has a maintenance piece to it. So while the basic supply is 9,600, the total contract value would be about 24,000 crores.
All right. Hi, Mr. Chaudhary. Good morning and congratulations on this. Well, your share with BHEL is around 55%. So does this apply to both the manufacturing as well as maintenance?
Yes, it is. Our share is about 52% to be precise. We're about 52%, and this is on an overall basis. So yes, it is on the supply and the maintenance part.
All right. Just another counter question. For these to execute these orders, do you have capacity, adequate capacity, or do you have to put on fresh capacity, incur some capex as well? Give us some clarity out there.
So, we would be producing these trains primarily in our plant in Uttarpara, where we have been producing the Pune Metro train, and we'll be producing the Bangalore Metro with CRRC, etc. So we have capacity to produce this kind of trains, but considering the magnitude of this order, which will kind of see us through for the next 5-6 years, so it will block one line of capacity. We are looking at expanding capacity, and so that we don't kind of let go of the metro market which we work hard on developing. So one part of our capacity would be blocked for this Vande Bharat, but we would be expanding and incurring capex to expand capacity in order to continue to be an important player in the metro segment as well. The contract also, the tender also stipulates that the final assembly and the testing of the train would be done at the railway workshop in Chennai. So in ICF, the railways will give us a particular plant or a part of a plant where these trains would be then transported and assembled, and BHEL's propulsion that in their scope would be fitted into the train. So that's the entire package.
Umesh, hi, morning. Just a few more questions. You mentioned this 23 to 24,000 crore value. What was that? Could you clarify?
Sure.
That was the total.
Yeah, the supply portion is about 120 crore per train. And the maintenance that we will get is about 1.5 times, 1.4 to 1.5 times of the supply price. So each year we would get a maintenance. So this is with a 35-year full maintenance contract. And globally, maintenance is a very good business to be in. I mean, we've seen whether it's in this or any other capital goods sector. So it's a very interesting development because it kind of opens up a new avenue for the railway rolling stock industry, wherein rather than just being a manufacturer, we are also getting into the services part of it.
So you're saying that for the 80 trains, over the value over 35 years, the total receivables could be 23,000 to 24,000 crores, if I got that correct.
Yeah, 4,000 crores. That's right.
Okay, got it. Now, could you, and as you said, this is a new opportunity. Could you give us some context in terms of, what is the number of Vande Bharat sort of trains which have been rolled out in terms of tenders, ordering, etc.? How much more visibility do you have at this point? I mean, even around the time of the budget, there was lots of expectation that we'll see a big announcement, 1,000 new Vande Bharat trains, etc. Could you provide us with some clarity there?
Sure. So the government has been very vocal about this, that they would like to move over to the Vande Bharat type of trains. The total, Vande Bharat started being produced in one of the railway units, which was ICF. Now they're producing it in the other railway units. But then they decided that they would also buy these trains from the trade, from people like us or the other rolling stock manufacturers like Alstom, etc., etc. So they floated 3 tenders. There was a first tender of 200, that is the one that we have one part of. There is another 2 tenders that have been floated. One is been submitted and not opened as yet. One is yet to be, the price bid is yet to be submitted. So that makes it. But we understand
that makes it. Umesh, sorry, we missed that number.
That makes 400. It 400 trains.
Okay.
But apart from that, railway by themselves is producing maybe a couple of hundred or even a little more than that. So all told, we do understand that at least 1,000 trains of Vande Bharat would really come out on track over the next maybe 5-7 years. So the period can be a couple of years here or a couple of years there. But the intent of the railway is to, or the intent of the government is to completely transform the way railway journey is defined in India.
Got it. So, this 1,000 trains, just to try and put some numbers to it, I'm sure you're expecting a lot more revenue visibility, right, as you bid for these tenders that will come through over the next 5 to 7 years. If you look at your own revenue trajectory over the last many years, you are now sitting on a base of around 2,000 crores per annum. What do you think you can take it up to, given that you have not just this Vande Bharat orders, but also you're looking at exports, maintenance in a big way as well? What do you think you can take this trajectory to, annual revenues?
So, Sonal, if you look at the December revenue, we did about 750 crores. So that kind of takes us to a 3,000 crore annualized revenue situation. Now, from where we have come 5 years ago, we were in an annualized revenue of 300 crores. So we have, of course, the journey which is quite meaningful. Going forward, we have to, and this is also important to state that, in terms of our strategy, from being a wagon manufacturer, we have now emerged, or we are trying to emerge ourselves as a railway system provider. So we've kind of also proposed a change of our branding and our name from Titagar Wagon to Titagar Limited. And the 2 businesses that we are focusing on is on the freight rolling stock and on the passenger rolling stock. And both of them, if you really look at the current revenue that we are getting, the December quarter revenue, if I kind of take that as a benchmark, that was 85% from the freight rolling stock. So, while that continues, the passenger rolling stock is a business that is kind of just as a startup, it's just starting now. So we believe that there is a good kind of attraction, there's a good tailwind in terms of the entire railway infrastructure spend, in terms of the entire space that we are in. And we have been able to upgrade ourselves to be an important player in this space.
Got it. Very quickly, Mr. Chaudhary, final question. I'm reading a Nuvuma report. They believe that you'll do close to 3,700 crores in FY25 with margins close to around 9%. Going by your order book and all that you said, is that doable?
So I would not like to comment on any, we don't give any guidance as a policy, so I would not like to comment on that. But all I can say is that, we have a very healthy order book. We didn't speak about the railway.
Revenue growth, sir? Mr. Chaudhary, double-digit revenue growth possible from here on? That's doable, right?
I think that's something which is definitely possible in terms of our revenue growth, considering the order book and the ramp up that we have been able to do.
And margins in high single digits, 9% or you're doing already around 8%? 9% is doable.
We've always given a guidance of a margin level of a sustained margin level of 8 to 10%, and we continue to do that. I would like to probably highlight upon the wheat tender, which is something which we didn't speak about, which also we got the letter of a week ago, along with RK4G, which is a very important part of our entire strategy. You see, whether it's freight rolling stock or it is passenger rolling stock, Indian rolling stock business has always been impacted by lack of availability of wheel sets.
Interesting.
And like Ramakrishna Forging, which is a pioneer in their field, we that it's a very kind of a very synergistic advantage for both our companies.
Absolutely.
One more question, sorry. Just going back to, if you can respond briefly to this. So, trains were anyway being rolled out, right? So so this is a new, train sets are different, as compared to the earlier trains which were being made. So are we talking about the number of trains being rolled out being much more than before? Because is it the question of one replacing the other? I mean, the new replacing the old, or is it that the order value per train is much larger, or is it that the private participation in these new trains is much larger? Which one is it? Briefly.
It's a combination of all, but it is primarily a shift in the entire rolling stock experience of the commuter. So, basically what is Vande Bharat? It's an EMU.
No, I got that. Umesh, but I'm saying, the response has been fabulous and very, very well received. But from a business point of view, from a manufacturer point of view, I'm just trying to understand which of the three is it?
So, from a manufacturer perspective, it is the trains, modern trains coming to private sector. Earlier, the trains were being produced by the railways of the old design. Here the railways are saying that come and supply us modern state-of-the-art international quality trains where the private sector has a role to play.
Okay. In fact, I do want to also ask you about that whole, the JV with RK Forgings and what you've bagged, but we've completely run out of time, so we'll take this opportunity and we'll take this discussion to another day. Let's slip into a quick break on that note. On the other side of the break, we will have Mitesh Thakkar and Sudarshan Sukhani join in for some technical trades. Stay tuned. Okay, so we are bracing ourselves for what looks like it's going to be a good day today, but let's get our technical guests on board. Before that, Hemang Jani is still with us. So, before we bid goodbye to him, Hemang, I don't know if you heard that conversation we had with Titagar, but this has been a fabulous stock, right? I mean, it's more than doubled in the last 12 months. Do you see more upsides based on the visibility with these Vande Bharat orders?
So, the stock has done very well, but one point which I would like to make is that apart from the order inflow because of Vande Bharat and the way the government is spending, what we must understand is that how much time it takes for the order to get executed into the revenue and profitability. And given that the stock has already run up so much, I just saw that it is quoting at some 48 times, trailing peak. So, and that is true for some of the other defense stocks also. So, my feel is that rather than reacting to the order inflow, what we should bear in mind is the valuation and the actual growth visibility, because you will have some patchy quarters. So, look for entry into some of these names, at a correction rather than chasing when the order flow is very strong. And we don't cover this stock, but within defense we like Bharat Electronics and HAL, and we think that from a medium to long term perspective, they are very good bets given the kind of positioning that the government has taken.
All right, Hemang, thanks a lot putting some caution out there in terms of valuations. But Hemang, just to add on to that point, a Novuma report which are very, very bullish on them, they're estimating that the EPS goes from around 7 rupees to around 15.5 rupees in the next few years. So let's see whether or not that happens, but we're taking your caution on board. Thanks a lot, Hemang, for stopping by and discussing all those stocks with us. We look forward to having a chat with you in the coming days as well.